Hello, everyone. My name is Chris Wade, Partnership Manager here at Bitwave. And today I have the pleasure of speaking with David and Aryeh at Onchain Accounting. Gentlemen, how are you two doing today?
Doing good. It's good to see you, Chris.
Fantastic. Thanks for having us, Chris.
Yeah, always a pleasure catching up with you two. I know that we have a long-term partnership here, and it's great to see the success that you've been able to establish for over the course of the past year. And would love for you to share with the audience just a brief introduction about you two, how you two got into the space, and about on-chain accounting, what you specialize in.
Sure. So, David and I have been into crypto since 2015, and we connected a few years back. I was looking for some accounting help, and he was already in the space doing on-chain accounting. And, through conversations, we noticed there's a huge gap in the industry. So we launched on-chain accounting with the mission to close that gap, to help businesses that are operating in this emerging space with this new technology, to provide them with books, taxes, crypto reconciliation, and that's the short story of how on-chain accounting came about.
Remarkable. Love it. Love it. I think it's so important to really understand the value that we're providing with our ecosystem. It can be pretty tough for a company to gain a sense of assurance to move from Web 2 to Web 3, and how you two are really doing some due diligence here in partnership with Bitwave to be able to have that type of transparency and being able to make sure that businesses are confident in making sure that they maintain compliance. And I think a part of that due diligence is really understanding about new tokens that are being issuing. One of my favorite things about this industry is the innovation. And that kind of leads to our discussion for today. There's this new token, ERC-404. I was hoping that you two can provide some insight in terms of what's going on within the Ethereum blockchain.
Yeah, ERC-404 is a new token standard. It's really interesting. It's described as a mixture of the ERC-20 and the ERC-721, which is the NFT token standard. So essentially, allowing tokens or this contract to issue fractional NFTs. So like at the moment, an NFT is a non-fungible token. It's a unique asset, unlike, let's say, Ethereum, right? One Ethereum is the same as another Ethereum, or one link token is the same as another link token. And so if you wanted to fractionalize an NFT, you'd have to wrap it in a contract, and then that contract would issue corresponding, let's say you wrapped it and you issued 100 corresponding tokens. So if you had one of that corresponding token, you had like 1/100th of that NFT. With this new token standard, you'd be able to, the actual contract itself is divisible, is what it seems like. It's still being discussed and experimented with. So like you said, Chris, it's that this is the space of blockchain where like new things are being developed, daily, monthly, and us as accountants have to like be thinking, okay, how will this impact, the books, the crypto subledger? How is it going to look on the blockchain? How are we going to pull that data in? Are there any new tax consequences that we should be thinking about, which we are thinking about, and we should, inform our clients of? So yeah, ERC-404 is cool. And and I hope I anticipate there's gonna be a lot of discussion about it at ETH Denver, which I'm looking forward to talking to developers about.
Right, exactly. It's going to be interesting to see more and more companies, individuals acquire this type of token, and then also the various projects that will be leveraging upon this new token issuance. With that in mind, I like how you mentioned that it's so important to be able to have a basic understanding associated with how to account for these digital assets. And I was hoping that you could provide some additional insights in that regard. The first thing that comes to mind is being able to keep track of your cost basis But also, you have some insights about wallet hygiene as well. What are some additional topics or insights that you think businesses should consider when getting into the Web3 space?
I'd be happy to kick this one off, especially with the wallet hygiene. I think it's very underrated having good wallet hygiene because it's so easy to build a business and just continue and open another wallet and another wallet and another wallet. And I'm dealing with a client now who started off with about 60 wallets and they're almost at 150 wallets because while we're doing the reconciliation, they just found more and more wallets that was theirs, and they at no point actually put this on a spreadsheet. And now we have a beautiful master spreadsheet that tracks all the wallets, what blockchains they're on, the purpose of the wallet. And just having that in place in the beginning, I think, is so crucial because it saves so much friction going down the road when you're doing your accounting or when you're doing your historical reconciliation. And it could be as simple as, if you open a wallet, just add it to the sheet. Um, because, for example, if you send, tokens from one of your wallets to another wallet, but you didn't record that other wallet and it's not in your crypto subledger, for example, you have an outgoing transaction to somewhere where you don't know, when it's really just an internal transfer and it shouldn't have any tax impact. So really doing that legwork in the beginning, and so many companies we speak to that are right now on testnet and they're moving towards mainnet. Something we always tell them is like, be very on top of your wallet hygiene, try and have everything you can in place, make sure you're on top of it, because you don't want to get to a point where you're scrambling and you have to look back and you're like, oh, who was this and what was this? And it's just a huge time waster. So I can't stress enough the importance of good wallet hygiene and also knowing where your assets are, right? And there's also this sort of balance between having safety and having more wallets, because you could always create a wallet, use it, and then burn that wallet, for example. But that just creates more of an accounting kind of conundrum. So it's kind of this balancing act. But yeah, just I can't stress enough from the beginning. Just try and be as very accurate and detailed as to what wallets you have and what the purpose of them are. So that's something that I underscore heavily when going on to mainnet.
Couldn't agree with you more, David. Really appreciate that insight. And I know from a subledger perspective too that when clients implement good wallet hygiene, having certain wallets for certain type of activity can definitely help automate that process to easily streamline that back office bookkeeping. And there's also some additional interesting insights here too, is that we have a feature. It's called our multi-inventory capabilities, where you can actually sell certain tokens that are tied to specific wallets. Instead of creating like one inventory of all of the cost basis that's across different wallets, with this feature, you can have a treasury of tokens, perhaps in a separate wallet, low cost basis. And then you have a trading wallet. We can run FIFO just within that trading wallet and not dispose of those low cost basis. So I think with wallet hygiene, that's just another perspective of how to actually reduce tax liabilities through good wallet hygiene too. So there's so many different benefits with this fundamental understanding of making sure that our clients have some flow of funds documentation as well.
Yeah, no, absolutely. And also it just reminds me of another client who has multiple entities, right? And keeping track of what wallet belongs to what entity, and sometimes a wallet under one entity and a wallet under another entity is sending money back and forth. So you want to capture that inter-entity transfer, and do it properly, whether it's a form of a loan or it's an investment or whatever. But the point is it could even be even more broken out when you're have more entities, and it all of a sudden could quickly become all over the place. So
Right. Yep. Certainly.
brush your teeth and have good wallet hygiene.
I just want to point out, what we've seen is when a client has a lot of wallets, it's actually a good thing. but like David is saying, keep track of him. And like you were saying, many wallets usually offer more functionality and features for automation, tax law calculations. But if you don't have the other aspect of organization, then you're just totally unorganized, and it works against you essentially.
Right.
So having both of those, that's good wallet hygiene.
Yep, really important insights. Now, just a couple last questions here. I think it's really important to share with everyone today what makes a ideal client. And also, it's the beginning of a new year. What are you really looking forward to over the course of 2024?
Aryeh, you want to take what makes a good client? I'll take what we're looking forward to.
Sure. So a good client, we like working with builders, companies that are, breaking boundaries in the Web3 ecosystem, whether they're Bitcoin miners, whether they're, building on Solana or a layer 2 or creating a layer 2 even. It's always exciting when we speak to clients, like, what are you building? And we're always like, wow, that's fascinating. That's so cool. We want to be part of the team. So that's usually always there. And a good client is like responsive. When we take on a client, we just go through everything. We go through all our wallets. We ask questions. Usually there's a lot of cleanup. So we'll have some questions for them on the cleanup. And, having a good continuous line of communication is very helpful because, we don't lose momentum. We get you cleaned up. We put in the right processes in place, and we have, whether it's a monthly or quarterly meetings that we review your financials with you. So just having clients that are committed to getting their books in order timely is very helpful for the process, and it allows us to provide them with a great product. So that's really an ideal client, someone that's building cool projects and understands the requirements to get the product done.
Excellent, excellent. Yeah, thinking about 2024, I mean, a lot to be optimistic about. Finally, we got some FASB guidance. Markets are pumping right now. It seems like that. There's a lot of innovation that's getting back into the space to certain projects that might have been on pause last year or finally launching this year. So, David, would love to hear your thoughts in that regard.
Yeah, I mean, just generally, it just in terms of innovation that you were mentioning, we're dealing with someone. We're dealing with the entity now that has founders all over the world in several countries, and in our initial call, they stressed what they wanted, and that was to be fully on chain, not even open one bank account. And that is super exciting to us because it's almost like unlocking a new milestone or a new achievement. It's like a goal, right? Because part of what got me at least into the space, I know Aryeh as well, is that having digital assets is and it previously was there, right? If someone's sending millions of dollars, it's really just numbers on the screen, and it's being sent back and forth. For example, if it's USD, but now it's just the restrictions are even less so. So being able to move around crypto is such a fascinating thing, and then to be fully on chain, to have no bank account, to really even lessen those restrictions even further, I think is such an exciting thing. And if we could achieve that with this client, I'd be super happy. And even just more so is just helping them build, helping them get their accounting in place, removing the traditional touch and feel of accounting, which is just like send your accountants whatever you have and be done with it and not have to deal with it, right? We don't like, I don't like that. We don't want that. We want to be a team that you can leverage, right? What are the insights that we're giving you? What are the numbers that you're seeing? What are the questions that you have? And being proactive based off of that, right? And taking business decisions based off of that. So it's really just overall like pushing the envelope as to how a new accounting firm could help and be different and innovative. So that's what excites us the most, and that's what I'm looking forward to the most for 2024.
Love it. Love it. Well, all right, David, it's always a pleasure catching up. Appreciate you sharing that insight today. And as always, looking forward to making this, the best year yet. So appreciate you too. Thank you so much.
Awesome. Thank you, Chris.
Thank you, Chris.